we are going to learn planning, budgeting, and control from the point of view of the organization. Now, this is very important. We are not going to deal with budgeting projects. I believe you have in this program courses about project, but we will look at budgeting from the overall perspective of the organization. Basically, if I try to use the analogy of flying, I'm going to put you in the cockpit and have you faced with dilemmas that actual managers of non-profits faced in the context of budgeting, planning, and control. Okay? Now, why is it relevant? Why should you care what happened in the cockpit? So I would assume that most of you are not pilots, if we use the analogy, which means you don't run your own non-profits yet. But I also assume that you will. If you don't do it now, you will in the future. So this course is built from the point of view of a director of a non-profit. Okay? Not from the point of view of a fundraiser, although a lot of things here are relevant to fundraisers too, but from the point of view of the director, which I can assure you is a very, very lonely job, because only the director takes the difficult decisions. Nobody wants to take part in difficult decisions, and we are talking about the financial or economic part of the organization. These are usually the difficult decisions. Okay? Now, another question is, why should you bother, since that is something that a lot of time people say, why should I bother with the financial management? I will have somebody in the organization who will do it for me. Okay? Now, unfortunately, although it would be very good if this was the case, unfortunately, in most of the times, this is not the case. And why is that? Two reasons for that. First of all, many non-profits are small organizations, and they don't have the resources to recruit a CFO or somebody who is an expert in financial management. So the role falls on the shoulders of the director. Also, non-profits who do have CFOs, in many cases, those CFOs will not, I would say, act or perform the duties according to the principles that I will show you here in this course. And the reason is that these people mostly come from the business sector. Most accountants and people who finished MBA, they come from the business sector. And there is a significant difference in the goals of a business organization and a non-profit. And that creates a significant difference in the way that you have to manage your financial conduct. And this is not something that people are aware of. And I will emphasize that starting from now, almost, from today. Okay? And so this is the issue of relevancy, which means that even if you don't have to do these things by yourself, most probably you will have to, as a directors of organization, you will have to demand or instruct the people who work for you to follow these lines of financial management. And the last thing is, how do we know that what I show you here is true or correct? I've already said that a lot of people who work in non-profits don't follow these principles. So the reason is not because I said so. That's not a good enough reason. The reason is that we have to define goals for our financial management, and this is not a trivial issue. I will speak about that in a minute. And then everything else comes from the goals, which means that once we agreed upon the goals, everything that I will show you, every method, every table, comes back to these goals. It has to effectively achieve these goals. Okay? And that what makes it valid. Not the fact that I'm here and presenting you 25 years of experience. That doesn't matter at all. What matters is that we have to define goals and follow them by creating methods that can reach these goals. This is, by the way, an advice that I would give you for any managerial issue, and although it sounds trivial, you will find out in your professional career that many times people like to do the opposite, which means that they draw the dart and then they circle, they make a circle around the dart, which means they create the goals after they have the methods, okay? Which obviously is the wrong way to deal with that. So before going into financial management of non-profits, first of all we have to define what are the goals of financial management in a non-profit. And the reason this is not a trivial question, trivial issue, is that all the methods that we employ in financial management originally came from the business sector. But in the business sector, there is a very clear goal for everything, which is creating profit in the short run. That will be the goal of most businesses. And creating profit in the long run, that will be the goal of all businesses. Which means that even if a business enterprise takes a decision which is not aimed to create a profit in the short run, it is aimed to create a profit in the long run. Okay? So the business sector is focused on one goal, that is profitability. Now we come to non-profit. So the goal should be non-profitability, right? Well,
sustainability.
All right. So first of all, we have to define the goals. That is why it's not trivial. The goals of a social organization, of a non-profit, are outside the scope of financial management. These are social goals: educational, cultural, welfare, environment. But these are not economic goals. So what does financial management in a non-profit has to achieve? And here I present three main goals, which will be our, you can say, our compass. Everything that we'll do from now on will relate to these three goals. So let's look at them. The order is not important. It's not that one is more important than the three. They are all equally important. So the first thing that we need from our financial management system is an internal presentation of the economic impact of each activity/program, especially for go, no-go decisions, and I will add also for prioritization. So let me explain. The business sector, or any business enterprise, sells products and services. Okay, this is what businesses do. They sell products and services, they get income, and they want to create profit. In the non-profit world, we don't actually sell, although some non-profits receive payment for services that they provide, but it's not the selling that is important. Non-profits provides programs. I use the word also activity because activity is the general term, but we will focus on programs. Usually when you will be asked, what do you do in your non-profit? You will present the different programs that you have, and obviously we assume, or we want to assume, that these programs achieve the social goals of the organization. Okay? But our units are programs. Now, each one of these programs should contribute to the goals of the organizations, which are not financial, not economic. They are social, educational, whatever. However, each program also has an economic impact on the organization. Some of these programs generate income, either donors, funding from the government, sometimes fees for services, and they also cost, they have expenses. Okay? So each one of these programs has an economic impact on the organization, and we as directors, we need to know this impact. Now, why do we need to know it? It is crucial that we know it when we decide about what we call go, no-go decisions. What are go, no-go? For example, we want to open a new program. Okay? Now, before we open the program, first of all, we consider whether this program contributes to our social goals. If not, why should we do it? But under the assumption that it does contribute to our social goals, we also have to understand what is the economic impact of this program. If, for example, we have a deficit or a difficult economic situation, we will not be able to take a program which generates less income than its expenses. On the other hand, if we are in a stable economic situation, we might be willing to take programs which are subsidized, which means that we have to find resources outside the income of this program in order to fund it. So this is for go, no-go decisions. Obviously, the opposite is when we need to close a program, when we have a reduction in income and we have to decide which programs we close. But on top of that, when we look at our organization, even if we don't consider closing a program, which is a kind of a radical situation, or if we don't have new programs, for the general prioritization of our organization, for grading our programs, which is more important and which is less important, we have to look on two dimensions. And that is why, at least to my understanding, financial management of non-profits is more complicated than financial management of a for-profit organization, because a for-profit organization works on one dimension, that is profitability. A non-profit organization has to consider two dimensions: the social, educational, the goals of the organization, that is one dimension, and the economic dimensions. And each program has to be weighed in these two dimensions for us to decide where it stands in the prioritization of the organization. Is it important or is it not? Just to give you a very simple example. Long time ago, I used to work for an organization which is called the American Jewish Joint Distribution Committee. I was responsible as a CFO for the program in the former Soviet Union. And at the time, the JDC, as it's called, opened community centers in different locations in the former Soviet Union. And the plan was to have them become self-sufficient, meaning that they can support themselves. So in order to design a plan for that, I went to meet directors of community centers in Israel, just to learn from their experience. And I met a director of a community center here in Jerusalem and asked him about the way he manages his economics. And he said the following. He said, look, I have two major programs that basically fund the organization. That is my gym and my swimming pool. Okay? These programs generate a significant surpluses, or we call it later on contribution. However, he told me, from my point of view as a director of a social organization, these programs take 0% of my interest. I'm not interested in them. They generate money, but I'm not here as a director of community center to run a gym and a swimming pool. I'm interested in the programs that I run for people with disabilities, for the elderly community, for children in the neighborhood. However, these two programs which generate the income, they enable me to fund the programs that I'm unable to find money to fund them. Okay? And this is basically the, I would say, the picture that you'll see in many, many nonprofits. That you have programs that have more income than their expenses, and they subsidize other programs, and you need to be aware as a director which is what. Okay? Otherwise you make mistakes. So this is goal number one. We need a financial system that will present to us the exact economic relationship or impact of each program in order for us to be able to take informed decisions. Then we have goal number two. Goal number two is unique to nonprofits. And that is that in a nonprofit world, we use our budget and we use our financial data in order to raise money. Okay? Again, this is unique for nonprofits. A business enterprise does not use its budget to raise money. Okay? They use their products and services, but not their budgets. Nonprofits use their budgets, and again, I'll give you an anecdotal story about that. In 1998, I went to one of my first visits in the former Soviet Union. I went to visit the JDC office in Kiev. It was different area, different time. It was peaceful, and that was one of the larger offices with a budget of something like $10 million. And I sat with the people of the finance department, and I asked them to describe their job. What do you do? And the chief accountant there told me it is very, very simple. We buy reports. In Russian, we покупаем отчеты. That's right?
Yes.
We buy reports. So I looked at her and I said, what do you mean we buy reports? I mean, it doesn't sound so well. We buy reports. So she said, look, the way we deal with our supported organization is that they submit report, we give them money. So this is the transaction, we buy reports. So this kind of humoristic, simplistic description describes in technical terms what happens many times between nonprofits and their funders. When you have a new idea, a new program, and you want to fundraise for it, the first thing that you need to do is you need, after you presented the idea and all the good things that the program will do, the second thing that you are asked is to present a budget, correct? How much money do you need for the program? You present the budget, and if the program is approved by the funder or the donor or whoever gives you the money or the government, then the next thing will be that after a quarter you will be asked to submit a report that shows that you actually spend the money that you claim that you need for that program. Okay? So our financial management system, both on the side of planning, which is the budget, and on the side of reporting, which is the actual expenses, has to be able to serve our fundraising efforts. And needless to say that if we cannot raise money to our organization, there will be no organization. Okay? As we used to say, money talks, bullshit walks. Okay? So no money, no programs, nothing. So this is goal number 2. And I don't have to put a lot of effort to convince you that this is an essential goal. And then we have goal number 3, which is monitoring and controlling the actual income and expenses for effective risk management, or, as you correctly said, Abigail, sustainability, which means that we want our organization to be healthy financially. Okay, we want to make sure that we will exist in the next month, in the next year, in the next 10 years. Otherwise, we cannot do whatever we want to do. In order to do that, we have to apply methods of risk management. So what is the risk? So the risk here is what we call default or insolvency or bankruptcy. And in simple terms, is that you come to your office in whatever, first or the second or the third of each month or any month, and you realize that you don't have enough money to pay salaries and you don't have enough money to pay your suppliers, and basically you're out of business. Managerial system is basically an information system. It does not take decisions instead of us, the directors. We have to take the decisions. The role of the system is to present information and to present it in advance so that we will be able to take the right decisions. Then it's up to us if we have the courage to do what needs to be done. That cannot be solved by Excel or any other system. But at least we get the information. So again, this is a crucial role. We need to have this information. So these three goals basically will shape everything that we will see from now on in terms of methods for planning, budgeting, and control. Okay, and I assume that there is no question that these goals are very important. You may add other goals, but from my experience, these goals are, when you learn, I don't know if you remember from your 8th grade when you start learning geometry. So first of all, you have the axioms, and then based on that, you start to develop all these theorems and start proving about triangles and all that. So these are like the axioms. These are goals which are essential for the functioning and well-being of every or any non-profits. Okay, so before we continue, any questions? Okay, so the next thing is I want to talk a little bit about the discipline or different disciplines that exist that basically enables us to present and follow on the flow of financial information in our organization. And in general, the discipline which is used for both planning, budgeting, and control is called managerial accounting or cost accounting. Okay? And it deals with the way we allocate the costs. Bless you. I will talk about income later on. It's also an important issue, but the main challenge is in cost or expenses. Now, from looking at our three goals, it is already clear that both goal number 1 and goal number 2 requires that our budget and our control system, that has to be in equivalence with the budget, they have to be based on our programs. If we want to present the economic impact of each program, and if we want to fundraise for programs, okay, and I will add a few words about that later on, we need to be able to present budgets based on programs and to follow on income and expenses based on programs. So these goals, first of all, define the budgetary units, which are programs. Okay? If we budget only for the entire organization, general income and general expenses, we cannot achieve goals 1 and 2. Okay? So you can see that as a direct conclusion from these goals, we already understand that we need to present our budget, and now we will talk about budgeting, which is the planning phase, based on our programs. Now, if we want to do that, we have to be able to allocate both income and expenses to the different programs. Okay? Again, a direct conclusion from our goals. We have to have some kind of criteria of allocation of both income and expenses to the different programs. Otherwise, if we don't do that, and if we present budget without the allocation of income and expenses to the program, we will not be able to achieve either goal 1 or goal 2 or both of them. Now, when we look at the different methods that exist to allocating expenses to programs, here we encounter the first problem or challenge. Depends if you speak English or American. Okay? So, challenge. Let's choose American. Okay? So this is the first challenge. And I will explain that. There are basically, in the discipline of managerial accounting or cost accounting, two ways to allocate cost or expenses to programs. Okay? The first is called absorption or full costing. So we'll use full costing shorter. And the second is called direct costing. Now, what is the difference between full costing and direct costing? So let's use an example to explain that. So again, I'll use K&O. You will have to excuse me, I use K&O a lot in my... so let's say we have two programs, okay? We have, for example, in K&O, we have an afternoon program for the school, for the children in the school, and we have a hydrotherapy center for hydrotherapy treatment for these children. The direct costing looks at the costs or expenses which are allocated to each one of the program based on the economic criteria, which is an incremental criteria. What does it mean? My expenses, or the expenses of any organizations, are usually divided to salaries, and then we have other type of expenses like materials, food, medicines. Then we have all kind of services like utilities. If we have a pool, then we have to pay a lot for energy, heating the pool, electricity. Sometimes there is rent. We don't have rent, we own the building, but there is maintenance. These are the expenses that we usually encounter. Now, when we look at these different type of expenses and want to allocate them to the different programs, okay, then if we use the economic criteria or the direct costing criteria, we ask ourselves, if this is a new program, what are the expenses that were added to the organization when we started the program? Or if it is an existing program, what are the expenses that will be saved to the organization if we decide to close the program? This is the way economic decision-making works. It works based on increments or additional, or the other side of additional is saving. If I want to understand what is the economic impact on a program, on my organization, if it's a new program, I have to ask myself, suppose that I open this program, what are the additional expenses that will be added, and compare to that to the additional income that will be added. This will be my decision rule, my economic decision rule. Or if I talk about existing program, I have to ask myself, suppose, theoretically at least, that I have to close the program, what are the expenses that will be saved? And then, on the other hand, what is the income that I will lose? Okay, so I don't want to talk about income right now. I'll get to that maybe even today. But in terms of expenses, and again, let's use the example. So if I decide, let's say, to close the hydrotherapy program in KNO, then obviously I will not need the hydrotherapist anymore. So their cost is a cost of the program based on the direct costing method. Okay? Now, I will probably, let's say there are some kind of materials that we buy for these programs. I will not then need that too. So that is also cost of the program. But what happens to, let's say, the electricity, or to the heating, or to the maintenance? So this is an operational question. If I close the hydrotherapy program, but I continue to operate the pool, let's say for commercial use, then maintenance, electricity, and heating will not change. So from the point of view of the direct costing, these expenses should not be allocated to that program. Okay? Or again, if we take another example, if you have a building, you have a community center, okay? And in that building, you have different programs that run, like dancing classes and English classes and whatever, computer classes, and you decide you want to know what is the cost of, let's say, dancing classes from the point of view of direct costing. Then you ask yourself, what will happen if I discontinue the dancing classes? So obviously you don't need the instructors anymore, so their cost will be saved, and this is part of the expenses or the cost of the program from direct costing perspective. However, the maintenance of the building, the rent if you pay rent, the municipal taxes, they will not change due to the fact that you close that specific program. And therefore, from the point of view of direct costing, they will not be allocated to that specific program. Okay? So this is the way direct costing allocate expenses. Now, what is full costing? Full costing basically says the following. I want to take all the expenses of my organization and allocate them to the different programs based on, again, what is called in American fair share, okay? Which means that I have to create some kind of an allocation method for, on top of the, if we take the dancing classes as our example, on top of the salaries to the instructors, I want to allocate part of the rent and part of the maintenance and part of the electricity and part of the municipal taxes and part of management, okay, to that specific program and actually to all the other programs, so that eventually when I look at my organization budget, I will see only programs, and the cost, the sum of the cost of all the programs will be the total cost of the organization. That is why it's called full costing. It basically based on full allocation of all the expenses of the organization to the different programs. Now these two methods exist in parallel, direct and full costing. One is used for economic presentation, and the other is a necessary way to present cost or expenses for fundraising. Okay? So again, I repeat that because this is very important. For goal number one, which is the economic presentation. You want to ask something?
So the full costing is for the internal presentation, and the direct costing is for the external presentation.
But the opposite.
The opposite.
The opposite. Your name?
Lindsay.
Lindsay. So the opposite. The direct costing is for our internal presentation, for looking at the economic impact of each program. This is something that you, everybody, we are interested as directors for our prioritization. But when we want to fundraise for a specific program and we want to present the budget, we have to be able to raise money not only for, if we take the dancing classes as an example, not only for the salaries of the instructors of the dancing classes, but also part of the maintenance, part of the electricity, part of the management has to be included in that budget, so that overall we will be able to cover these expenses. Okay? And that brings me to, we'll talk about that later on, but I'll use an example that I always give in these type of discussions, that in all my professional experience, I have never seen a grant which requests money for paying the electricity bill. I don't know, maybe you have seen it. I have never seen a grant like that. Please give me money to pay my electricity bill. However, if we can't pay the electricity bill, we can close the organization, right? So that is a fundamental issue in non-profits, which we will address specifically, and that is that we have to be able to present our budgets in the full costing manner in order to raise money. That is goal number 2. And we have to be able to present them from the economic perspective in order to make correct decisions. Okay? So this statement, I will show you many examples to explain it. But again, it is derived directly from our goals. Okay? Which means that if we are not able to present our budget in these two forms, we will not be able to achieve these two very important or crucial goals. And that brings me to the conclusion of all that in a non-profit, we need a dual presentation of our budget. We can't have one. It's not one or the other. We need both of them. One to raise money and the other to get an accurate picture of our organization in case we need to take economic decisions. Okay? So this is basically what you have here in all these wording, and the first part, and that is the presentation using the direct costing. We will call it economic map. Now, I have to admit that I invented this term, but I didn't invent the form of presentation, just the name is very complicated. The formal name of this type of presentation is income and contribution statement, which I don't find very informative. I think economic map is more informative, so I prefer to use that term, but it's basically the same. That is a form of presentation that we will use for our budget in order to achieve goal 1, and it will be based on direct costing. And then we have the full costing, okay, and that is in order to achieve goal number 2. Okay? Now, to try to explain the connection between these two forms, I have created this table, hopefully will be beneficial for you to understand. One full costing and one direct costing. Now, direct costing basically divides the cost on a criteria which is called variable versus fixed. Now, variable versus fixed, what does it mean? So, it is variable versus fixed in the context of our units of measurement. Now, in non-profits, I have already stated that our units will be programs. We don't look usually at services and products. Non-profits almost never produce products. Sometimes they produce services, but usually the unit will be a program. So a variable cost of a program is a cost which is dependent on the existence of the program. If we have the program, we have the cost. If we don't have the program, we don't have the cost. This is the variability. Okay? While a fixed program, in the context of a program, is a cost which is not affected by the existence of that specific program. Okay, and again, I use the example of the infrastructure, although I will show later on more examples. If I have a building, a facility, and I ran several programs in this facility, then in most cases, the expenses or the costs which is related to that facility, maintenance, utilities, rent if I pay rent, municipal taxes, will not be affected by the existence of each one of the programs that operate in these buildings, and therefore will be fixed. Okay? Another example of fixed cost is obviously general, what we call overhead, or general and management, or fundraising cost, which usually will be fixed. They will not be dependent on the existence or non-existence of any specific programs. And also what we call professional staff. Like if you have a large organization, again, I'll give you an example of an organization that I consulted in the past, an organization that deals with children who fall off from schools. You know, they disappear from the school, and the organization tries to identify them and bring them back to school so that they can finish their graduate. So this organization operated about 40 centers all over Israel. Each one of the centers was defined as the program. Their program were defined based on geographical criteria. And for each school, they had staff that worked in that school. So the cost of this staff was obviously a variable component, which means if I or the organization decided to discontinue a program in one of the schools, then the cost of this staff will be saved. However, on top of that, they had people who were giving like across-the-board services, like training, staff training. They had field workshops, and they had somebody who was responsible for the field work, the outdoor workshops. So the salaries of these people was not dependent whether they had 40 schools or 41 or 38. These people received the same salary and had the same position. So these were also under the fixed cost. Okay? So this is the way direct costing look at the allocation of cost to different programs. Now, how do we look at the allocation of cost from the full costing perspective? And here again we have something which is unique to non-profit. As I said, full costing basically wants to allocate all the expenses of the organization to the different programs. And from that point of view, it doesn't matter. There is no difference between the different cost items. Everything has to be allocated. However, in the non-profit world, we have another distinction, which is between programs and overhead, or general and management. Now, the reason for this distinction is basically arbitrary. It relates to some kind of a notion between donors that program costs are good cost and overhead are bad cost. And that is something which is, I would say, debatable. Debatable will be understatement, but it does exist. So in order to comply with that, and again, these are the rules of the game. If you don't agree with them, you can decide not to play in the game, which means to be out of the non-profit world. But if you are inside, you have to comply with them. In full costing, we want to distinguish between program expenses and overhead. Now, how do we do this distinction? So, in Israel, there is some kind of instructions that the government published which basically determines the criteria between what is overhead and what is program. In other countries, although there is no directive from the government, usually the same criteria are applied. And in order to demonstrate that, I'm going to show you an example from a foundation which is called Lloyd A. Fry. I have no idea what they do, but I found that their criteria here, and it is a very good example. So, we go back to the Moodle, and as I said, in the Moodle we have all kind of additional material that I will refer you later on as on top of the PDF kind of complementary material. So here we have criteria for allocation of program and overhead expenses. So let's open it and increase it a little bit. Okay, so here this foundation, yes,
Sorry, I know I'm a little late in the game, but could you just explain the difference between full costing and direct costing one more time?
Okay, so let's go back to that. So direct costing, we allocate to each one of the programs only the cost items which are variable. Variable meaning they depend on the existence of the program. All the other cost items which are defined as fixed will not be allocated to any specific program, but we have to show them somewhere. So we will see where we show them. Okay? But if we have, let's say, an organization with 5 programs, so we have expenses or cost of program 1, 2, 3, 4, 5, and then we will have 2 more items which are not programs in which we will have to show the fixed cost or the fixed expenses. In full costing, again, if we have 5 programs, we will look at the budget in which all the expenses of the organizations are allocated to these 5 programs. So when you sum the expenses or the cost of all these 5 programs, you will get the total cost or the total expenses of the organization.
Except for the overhead?
The overhead also will be allocated to the programs. Why is that? If you want to fundraise, and you fundraise based on your programs, which is the major challenge of nonprofits, we'll talk about that, I think, even today, then you have to include a share of your overhead, of your management expenses in each one of the programs. Otherwise, where will you get the money to fund your salary as a director, or the electricity bill, or the internet, or whatever is under overhead, which we'll see in a minute.
But what ramifications, like what practical difference does it make, just in terms of between full and direct, just in terms of how we present this to like the donors? I mean, why does it make a difference?
Well,
how does it play out? Is what I'm asking.
Okay, so first of all, we will see many examples about the differences, but it plays out that when you present your budget to donors of, let's again take the example of the dancing classes. Let's say I want to fundraise to my dancing classes in my community center. When I present the budget for the dancing classes, I will present the instructors, and I will also present some part of my maintenance and some part of my electricity and some part of my management. And the argument will be that in order to have this program of dancing classes, I need to maintain the building, I need to pay municipal taxes, I need to have some kind of management. Somebody has to make sure that these instructors will get the salaries and accounting, etc., etc. So full costing has a justification. Okay, we all understand that we can't run programs without electricity, without internet, without management, without maintenance if we have a building. So some part of these expenses, what we call the fair share, has to be allocated to each one of the programs. And when we present the budget to outside parties, especially to funding agencies or to donors, we want to include a certain share of all these expenses in the budget of the program in order to cover the entire expenses of the organization. However, when we look at our budget internally for our decision-making process, it is not necessary. Here we want to see kind of a naked picture of the programs. Only the expenses which are dependent on the program will be presented as the expenses of these programs, and all the rest will have to be presented in different blocks, which we will see later on, but not as part of the expenses of the program. Okay, this is the dual format which we need. Okay, now if we go to, just to explain what is overhead and what is programs. So here they have, this is based, the items are based on something that we will see later on, which is called the 990 form, which is a form that in the United States each organization has to submit to the IRS, to the tax authorities, and it's very informative. That is why we use it. And you can see, for example, that organization management, okay, which is basically the salaries of the management, okay, and here they tell you that organization management can be allocated partly to the program and partly as overhead. Okay, why is that? Because in non-profits, specifically in small organizations, the director of the organization, she has a capacity as overhead, as managing the organization, but usually she will also be very much involved in the programs. Okay, so that can be allocated to both. Now, administrative support staff will be allocated either to general administrative or to program administrative. I will explain the difference maybe even today, if not next time. Now, development and fundraising staff will be part of overhead. Legal fees, overhead. Accounting, overhead. Now, if we go to a program staff, that will be 100% program. Okay? Which makes sense. Program staff is program. Okay? And then you can see that occupancy, which can be rent, which can be maintenance, can be allocated to either overhead or program administrative. Okay? So this is the way that this foundation breaks down the expenses between program and overhead. And if we go to our table, we can see basically the same thing. We can see that the table is divided to 3 layers. The top layer is program cost, which is also variable, means it depends on the existence of each program. And this is the example that I gave you on the dancing classes, the instructors. Okay? Then, let's jump to the bottom. The bottom, which is overhead, we saw the distinction between overhead, that will be the administrative staff, the director, part of her time as the administrator, the legal fees, etc. These are expenses which will be allocated as overhead, and they are also fixed, which means they are not dependent on the existence of any specific program. And the middle of the sandwich is basically what they call in the Lloyd Foundation program administrative or indirect. So there are different terms for the same thing, but this is the middle. Here it's a column. In my description it's a row, and that is expenses that are basically program, but they are not dependent on the existence of a specific program. Here we will find, for example, in the middle, maintenance, rent, professional staff that provides support for the entire organization, training. These will be here. These are program costs, but they are fixed. Okay? And that brings us to the presentation which is required for our economic map, for the direct costing. In the direct costing presentation, we will present expenses of the different programs, let's say 1, 2, 3, 4, 5. Then there will be another block, which will be the program fixed. Okay, what we see here, more or less, the distinction is more or less the same. What we see here in the middle column. And eventually, we will present the overhead or the general and management, again fixed cost, but it will be presented separately. Okay? So if we have an economic map of, let's say, an organization with 5 programs, we will have 7 blocks. 5 programs, program fixed, and overhead. Okay? Now, in full costing, when we move from the direct costing to the full costing, we will have to allocate first this layer, the program fixed, to the different programs, and after that, to allocate this layer, the overhead, also to the program. So eventually, when we move from the 7 blocks of the direct costing, again, in the example of 5 programs, we will have only 5 blocks, which are the 5 programs, and all these expenses will be allocated fully to the different programs. Okay? So this will be the way we are going to present the budget in the dual form. And what we'll do later on, we will start with the direct costing, and then we will move to the full costing. Okay? First of all, we will present kind of a naked format of the budget without allocating the fixed program and the fixed overhead, and then we will move to the full costing in which we allocate these parts to the different programs. So this is the general concept, and it doesn't have to be clear right now because we will see many examples and you will have a lot of exercises, so you'll do it yourself. But basically, just to again explain the concept. The concept is that we have goals that force us to present the budget in 2 different formats. One for outside and another for inside. Okay? And if we don't do that, obviously we don't have to do that, but if we don't do that, we will miss one of the goals. Okay? Either we'll not be able to fundraise, or our fundraising ability will be diminished because we will not be able to show the full cost of each program, or we will not have a clear picture of the economic impact of each one of the programs. Now, last thing that I want to talk about, probably that will be the last thing of this class, is classification of income. Till now we talked about expenses, but also there is income.
Sorry, but I have to ask another question.
Go ahead. Don't apologize. Questions are good.
Do you gonna bet that
She just raised her thumb. She has no idea what you said.
Yeah.
But she gave you unconditional
I
support.
know you just explained it for so long, but I just want to.
have your back.
I know you explained it for so long, but I just want to ask another just very simple question, which is the reason it needs to be 2 different documents, one for the outside, one for the inside. Is that just like, did you already explain it? Is it because it will like overwhelm the donors? Like, why can't I just have one very detailed financial plan that I would bring to donors and saying like, you know, $20 goes to haircuts and $500, you know, it's like whatever it is, toilet paper. Like, why does it need to be 2 different documents?
So that's an excellent question, which I will relate when I talk right now about income. Okay, that relates to the way that non-profit fund themselves, and it relates specifically to the phenomena of what we call earmarked or designated donation and unearmarked or undesignated donations. Okay? Or not only donations, also funding, earmarked and unearmarked funding. Again, this is something which is unique to non-profits. There's no such thing as earmarked income in the business sector. In the business sector, you sell your services and you get your income, and then you can do whatever you want. In non-profits, as probably you all know, some of the income that you receive is designated to specific programs. It is not income that you can use to whatever program that you want, but it is designated to a specific program. There is also part of the income which is unearmarked. Unfortunately, at least to my opinion, the trend or the way the non-profit sector develops over the last, I would say, 30, maybe more years, is that the weight of the earmarked increases and the weight of the unearmarked decreases. There is more and more funding which is earmarked to specific programs and less money which is unearmarked. Okay? And that brings us to this table, which I call the non-profits dilemma. Okay? Now, it is the custom to divide the different funding agency or the different donors between builders and buyers. Okay, this is not my terminology. This was termed, I think, in 2008 by somebody in the United States and became kind of common language in the non-profit worlds. So, builders and buyers. The buyers are those who give money to specific programs. So they are, in a way, they buy the program. Okay? They don't buy it in terms of contractually, but when somebody or an agency or a private donor donates or give money to a specific program, they will be defined as buyers. Okay? Their type of funding will be earmarked. Okay? Now, there are also donors which are defined as builders. These donors will give money to the organization and will be flexible enough or will be kind enough to tell the organization, we are not going to tell you how to use our money. We trust you, the organization, we trust your management to use the money for whatever purposes that you find suitable. So these are the builders. Why? Because basically they provide the organization with the ability to what is called capacity building. Okay? To use the money, for example, to new programs, to fundraising effort, to create training for staff. All these things that will not appear in the earmarked, they can appear here, and that will be the unearmarked funding. Unfortunately, this is getting smaller and this is getting larger. Now, to your question, Abigail, if my entire, let's say, donors or funding community were builders, I can use only the economic map. I don't have to take the trouble to allocate different types of fixed costs to the different programs.
But the economic map is the full costing?
No, the economic map is the direct costing. The economic map shows an internal picture of the organization and shows the relationship between the different programs. Some are, we will see next week, some are subsidized, some are subsidizing. Now, for builders, it doesn't matter because they support the organization in general and not a specific program. So they want to see the picture of the organization. In a way, you can look at builders as the same way you can look at investors in a business enterprise. Investors are interested in the success of the company. They don't care if the success will come from product A, product B, or product C. It doesn't matter, as long as the organization is successful. So builders are interested in the general success of the organization, and for them the economic map will be a suitable presentation. And it is also the more suitable presentation for the management of the organization. So if our entire donor community were builders, then there will be a full alignment between the way managements want to see the budget and between the way that we want to present the budget to outsiders. That will be the direct costing or the economic map. Unfortunately, this is not the reality. The reality is that most of the donors and funding agencies are buyers. They are interested in specific program, and moreover, they are completely uninterested in all the other programs, which means that if the government provides funding to an organization for a certain program, they don't care what happened in other programs. They don't care, they don't want to know. If a donor wants to give you money for a specific program, they will not care what happens in other programs. So for these type of donors who provide earmarked donations, we have to employ the full costing, but we present to them only the program which interests them. That is one of the rules that govern. We will talk later on about the border between financial management and ethics. Okay, there are a lot of things that they kind of sometimes contradict, but one of the rules, at least that I apply, is that you should present correct information, but you don't have to present information that you were not asked for. Okay? You don't have to answer questions that nobody asked you. You don't have to volunteer information that will hurt you if that was not requested from you. So in this case, these donors will be interested only in the program that they support, and therefore we will present to them the budget of these programs, but we want to include in this budget parts of all the cost items of the organization: infrastructure, staff training, management, fundraising. We want to basically load small part or allocate parts of these expenses to each one of the program, so that if our entire donor population will be buyers, we still have a way to fund all the expenses of the organization.